Hey everybody, I'm Zach.
And I'm Jesse.
You're watching Disruptive Investing News. And I thought we should talk about delisting this week.
Yeah, we're seeing a lot of this lately. Companies, many of them EV related, that went public 2 or 3 years ago, now getting delisting letters as their share prices fall.
We're talking about Arrival on NASDAQ, for one. This is a UK-based electric van and bus maker which went public in March of 2021. They were founded by Denis Sverdlov, a Russian entrepreneur who had previously founded the mobile phone retailer Yoda Devices.
Arrival got a non-compliance warning letter back on October 30th, 2022 because their stock price was trading too low, below the $1 a share threshold.
In April of 2023, Arrival announced that they had regained compliance with NASDAQ. Arrival's market cap is now just $27 million. Let me remind you, when it went public, it was valued at $13 billion. So that's a drop of 96% just this year. And disclaimer, we are not financial advisors. This is not financial advice. We do own some of the stocks that we're talking about here on this video, but we're not advising you on whether you should buy them or sell them. Do your own research, and investing involves risk.
Next up, we're talking about Nikola Motors, NKLA on NASDAQ, the hydrogen and electric truck maker that got a delisting notice in May of this year for the same reason.
So Nikola, you may remember, was founded by Trevor Milton in 2015 and went public in June of 2020 in a SPAC. Nikola was valued at $3.3 billion when they went public. Trevor Milton was convicted of 3 counts of fraud in October of 2022, by the way, and faces years in prison.
Nikola is now valued at $753 million, and as we reported on TTN this week, has had another 2 truck fire incidents in the past week.
Then there's Lordstown Motors. RIDE is the ticker symbol on NASDAQ, or was. The would-be electric pickup truck maker, which went public with a SPAC in October of 2020. They got a delisting notice in June after filing for bankruptcy.
It's not a good sign when you visit a company's website looking for a stock quote and you see this.
Now, do you remember Electric Last Mile Solutions, or ELMS? That's their ticker symbol. The Michigan-based startup, they SPAC'd onto the NASDAQ in June of 2021 with a value of $1.4 billion.
Electric Last Mile made electric trucks, right?
Right. They were working on electric vans and trucks at their factory in Indiana. ELMS got a delisting notice from the NASDAQ in December of 2021 because their stock price had fallen below $1 a share. They couldn't correct the stock price, so they got delisted in June of 2022. And we had bought stock in them so that we could follow them for our investor club. By the way, over on Patreon, you can join our investor club, and that's where we kind of fill you in on all this info week after week with our bonus stories and our interviews with CEOs. So that leads us to our most recent delisting candidate, Mullen Automotive, or MULN, on NASDAQ. You may not be that familiar with it. So Mullen Automotive is a Southern California-based startup that is almost 10 years old. They were founded by CEO David Mitchery. They IPO'd in November of 2021 on the NASDAQ. Mullen has been working on bringing an all-electric crossover SUV to market called the 5 EV Crossover. Mullen has a 127,000 square foot manufacturing facility that they fully own in Tunica, Mississippi. Mullen says they're adding a 1.2 million square foot addition to it, which would be a body shop, a paint shop, and general assembly. Now, this region has some of the highest unemployment rates in the country, which might be why they founded the factory there, so they could get cheap labor.
Okay, so what makes the Mullen 5 a contender?
Well, let's look at their stated stats for the entry-level version. So a dual motor, 0 to 60 in 3.2 seconds, which is pretty good, 95 kilowatt-hour battery, 325 miles of range, 80% charging in 20 minutes, and a starting price of $55,000.
So what's the charging speed?
They didn't say exactly, just 260 miles of range, they said, in 21 minutes. A lot of companies do this when they haven't built anything yet. They just tell you what they want it to do.
Okay, that's not bad, right?
Well, yeah, on paper, it's not bad at all. But this, keep in mind, we're just looking at 2 prototypes that were made, and I don't even want to call them prototypes because I don't think they drive. I think they're just sitting in a room. The 5RS, which is their top version, would have 3 motors, 0 to 60 in 1.9. Top speed of over 200 miles an hour, and carbon ceramic brake rotors. Now, both of these were designed by Rolls-Royce Ghost designer Andreas Thurner. Mullen currently has 23 granted patents globally. Now, these patents cover areas such as vehicle bodywork, headlights, taillights, doors, mirrors, rims, headliner seats, and steering. I want you to just keep in mind, you could tomorrow file a patent for,
a drawing,
a new mug, okay, that's, has a weird shape. And you might be granted it if no one has come up with that shape before. It is a design patent. It doesn't say that you have new technology or that your mug does something like, makes instant coffee. It's just that if I wanted to then make a mug that looked like yours, you could pull out your patent.
And this is a way for a company like Tesla or Porsche or Ford or GM, they can patent the look of their vehicle.
Right. You do it for two reasons. Okay. So if you're an established company, you do it to protect yourself. You don't want someone later to go, but I had the idea first.
And I mean, this is like when Nikola sued Tesla over, alleged patent infringement over the design of the semi truck, which was of course overturned. That is like one example of how a design patent is implemented. It's to say like, hey, you just copied a Porsche 911 when you made this vehicle. That's not fair.
And I want to point out, a lot of times it's rubber stamped by the patent office because they haven't heard from any objections. No, Tesla doesn't have time to go through every new patent application and go, hang on, that's ours. What happens is when you go to court, then you fight and then you argue who designed it first, who is your designer, where are your original drawings, and then it can be just thrown out. So it's almost pointless in my opinion. The main reason, here's reason number 2, why I believe that these patents happen, is so that companies can go, we have 23 patents. So that when you go to sell your company or when you're going to investors, it's like, look at all the IP we have in our portfolio. And if most of that is design patents, to me, it's worthless.
Yeah.
They do the same thing with trademarks. We've trademarked 93 different words and things. Great. To me, the patents that you should really care about are patents for technology.
Right.
In this case, I didn't find any. So, I mean, there might be a piece or two, but I didn't find any. So to me, just kind of ignore that.
Okay.
All right. So the 2 cars they've shown off were built by Thurner Design. So basically, this is a company you hire to come in and design you something. And they're basically just mock-ups. And this is largely just a list of what they'd like the car to be, a far cry from actually knowing how to manufacture this EV at scale. And to that point, let's look at their newer commercial division. So in the fall of 2022, Mullen claimed a majority stake in Bollinger Motors for $148 million. Do you remember the B1 and the B2 that we saw in person at the LA Auto Show? So we're showing pictures of them here. They're very like boxy, cool looking.
Utilitarian.
He couldn't, Bollinger couldn't really pull off the company. Same kind of problem. It's like cool design. The mock-ups look cool. But then it's like he couldn't get the price down. They're wicked expensive. And the stats weren't that great.
I mean, this was one of the first electric pickup trucks we had ever even heard of.
Exactly. And if it had come out like soon, it would have been a big deal, I think. But of course, he had to figure out how to manufacture it. So Mullen bought that. And that just cleared the other day. So then Mullen bought out Electric Last Mile Solutions and all of its assets.
Oh, the one that was just delisted.
Yes.
I was wondering what would happen to them. Okay.
Exactly. Okay. So these are Mullen's van and truck offerings.
And so they're making these in Tunica, Mississippi?
Yeah. So here's a video of the Mullen 3 being built. The Mullen 3 is supposedly available for deliveries now. But Mullen just got a delisting letter from NASDAQ because their stock hit an all-time low and dipped below $1 a share. Take a look at the long-term stock chart, which is kind of an amazing chart, actually. And then look at this one-year chart. Because it's so low in the far chart, and it was so high that you can't see any detail. So this one-year chart gives you more detail.
Okay.
Wow. So I did some research, and this is kind of a sidetrack here. I just want to take you guys on. So in 2021, 372 companies were delisted from stock exchanges worldwide. In 2022, it was almost the same. It was 371 companies. So far in 2023, as of September 7th, there were 296 companies delisted. But you know what? That doesn't really mean anything to you, and it didn't mean much to me. So let's show it to you in a chart. It's easier to see. So I built this chart.
Oh, wow.
And this was kind of surprising to me. So we see a big bump during the bubble burst in 1999 to 2001. And then even through the 2008 financial collapse, even through COVID, it seems to be pretty steady.
Yeah, I mean, there seems to be an uptick in 2021 and 2022, and likely when we get a full year's data also for 2023, but not like I was expecting to see.
No, I was really thinking that, especially with all these SPACs we've been having, and then, of course, we're having tight financial markets and stuff, and the interest rates are high, I thought we're going to see this huge spike.
But, of course, this is delisting, right? This is where the company is still running. We're like, hey, we're a company. And then...
It can be that. It can be that it's still running, or it can be that it's just...
Okay, so if they close, they
also delisted.
They delist themselves.
Right.
They don't get delisted from the...
Right. I mean, some of these companies may still be operational, for all we know, just operating at a much smaller scale.
I see. Okay, so why are these companies struggling, all the ones that we talked about, and in some cases failing? I mean, is it because electric transportation isn't a disruptive technology?
In my opinion, electric vehicles is the superior technology to internal combustion engines in every way, from emissions to number of parts to performance to power to maintenance to fuel costs to sound to weight to safety and to sheer economics. But, and here's the big but, it's not like you can just adopt the new technology and automatically become successful as a company. You have to thread the needle, so to speak. You have to get everything right. With an EV, that means everything from the aesthetic design to efficient powertrain design to software to scaling mass production to charging to marketing and selling. And if you weren't competing with Tesla, you might actually be able to take a breath now and then. But with Tesla as your competitor, you cannot stop iterating and lower costs.
So do you think that's why Mullen seems to be pivoting to bigger trucks, which is something that Tesla hasn't done yet?
That would be my guess. I'm guessing that in the boardroom, behind closed doors, as they begin to get supplier pricing for their Mullen 5 crossover EV, they're probably seeing that there's no way they're going to be able to make it for a starting price of $55,000 and still be profitable. Focusing on the commercial division, first of all, there's less competition, right? In fact, Mullen seems to have bought two of their competitors, Bollinger and Electric Last Mile Solutions. Maybe they even got some interesting tech from those two companies. I don't know. You would hope so for their sake. In the commercial space, electric trucks and vans have a lot to offer because, as we know, EVs are cheaper to fuel and maintain. And so even if they have a higher upfront cost, businesses know to look at the total cost of ownership, which usually comes out in electric's favor.
Okay, but with all that, Mullen just got a delisting notice. Do you think that they're going to be delisted?
I mean, they're in a tough spot, let's be honest. To get investors interested again in their stock means that they have to get a lot of positive news out the door in a very short amount of time. Mullen reported revenue of just $310,000 in Q1 of this year. They played up their $279 million worth of purchase orders for Class 1 and Class 3 EV vans and trucks from a company called Randy Marion Automotive Group.
What's Randy Marion Automotive Group? I've never heard of them.
Did a little digging. They are a Chevrolet, Buick, Cadillac, GMC, Ford, Lincoln, Chrysler, Dodge, Jeep, Ram, and Isuzu dealership located in Mooresville, North Carolina that have been a family-owned for 33 years. They claim to have over 1,000 employees on over 181 acres and about 9 dealership locations with 100,000 customers.
So they own a bunch of car dealerships in North Carolina, and they are going to buy Mullen vans and trucks and do what with them? Sell them? Rent them?
I guess. They also just opened a dealership in Florida. Marion also has one of the largest truck centers in the U.S. Look, purchase orders don't mean that much. I'll bet if we got to see the agreements that they have, there would be easy outs for Marion. And what I mean is, usually you say something like, I'll buy $279 million with your trucks, but if the following conditions are not met, I'm out of the deal.
Yeah.
And I'll bet there's so many easy ways out of the deal. If everything goes great, they'll buy the trucks. If
they want to.
If they want to. So... The problem is...
If they don't want to, then they probably don't have to. Right. Okay.
So, I mean, the problem, if this was a bigger company, if this was FedEx or UPS or something like that.
Or a company you've actually heard of.
Right. That would, A, give me a little more confidence. B, would make more sense. My guess is that they have good intentions, that Marion thinks, EVs are the future, which is great. And they think, we'll put these on our lots and we'll sell them to contractors and stuff. So that's all great. But in terms of, is this what you should base your future of Mullen Automotive on? I don't know. But we're not done yet. Mullen partnered with Global EV Technology Incorporated and EV Technologies LLC, which is basically the same company. They're collectively known as EVT. And they did that in April of this year.
What do they do?
They are a Toronto, Canada-based design and engineering consultancy firm that trades on the over-the-counter exchange because they got delisted, I think, or maybe never made it. They trade as EVTGF. As the stock ticker symbol. They have partnerships, they claim, with LG Chem, Magna International, and Proterra. And they also distribute the Moke EV. Do you remember the Moke?
I do remember that. I actually saw one when I was in Florida. So I have seen one. It exists. But it's basically a fancy golf cart, right?
They have a weird history. Back in the 90s, their founder and president was tried for a whole bunch of things, allegedly. Yeah. And then I guess he cleaned up his record or something. But when investors found out about this piece of news, the stock in Mullen also dropped because it doesn't seem like investors want to be associated with this company. So I don't think it helped Mullen.
Okay, but can we go back to Mullen's stock chart for a second? I mean, I don't know how it could look like this. Like, if I'm reading this right, it was trading at like almost $200,000 a share in 2012 and 2013. I mean, how could that be possible?
No, you're actually reading it right. Mullen implemented a 1-to-25 reverse stock split in May, followed by a 1-to-9 reverse stock split in August to try and stay above the $1 per share trading requirement. But still, the stock has remained below the threshold since August 16th, and that's why NASDAQ has determined the stock must be delisted. Mullen is fighting the delisting. As of last Wednesday, Mullen requested a hearing before the NASDAQ's listing qualification panel to request a further extension. When you do that, you first of all buy yourself some time. So they're still trading now. And this could effectively buy them 180 days if they get granted the extension. Other companies have done it. You basically go before the panel and you say, no, you don't fully understand. We're still solvent. I'm not sure how they plan to attract investors back, but my guess is that they're going to try the typical playbook.
Right. I mean, the full court press, regular press releases about new purchase orders, new models, new sales, more revenue, technology, all sorts of anything. They're like, oh, hey, did you just find a nickel on the ground? Hey, go talk to Greg. Greg will write up a press release about that because that's great news.
Exactly. And I mean, David Micheri, the CEO and chairman of Mullen, also recently wrote a letter to shareholders. And in the letter, he states that they have engaged Share Intel to gather data about what he suspects are unlawful trading practices. So I think they're going to do a lawsuit against Charles Schwab and TD Ameritrade. Not a good move, guys. Not a good move. He also listed some financial and operational highlights, and when I read them, I was not that plussed. Look, as of March 31st, Mullen had $60.3 million in cash and equivalents. And in Q1, Mullen reported a net loss of $220.9 million. So I don't think they have any runway left. They claimed back in February that they had access to $90 million in committed capital, but my guess is that that has all but dried up. Again, we're not financial advisors, so don't take this as financial advice, but my guess is that Mullen is on its way to bankruptcy. And I'd like to leave you with this. Disruptive investing today is getting so complicated. It's not like in 1975 when Zenith came out with its infrared TV remote. That one technological disruption or advantage led them to leading in US TV sales for over a decade to come. Today, you can't expect to come out with one feature that lets you disrupt the market. You have to be consistently innovating. And I think one of the biggest reasons for that, especially in this automotive space, is Tesla. They innovate so quickly in so many areas that most companies just don't have the culture to keep up. What we hope to help you do as investors here on Disruptive Investing is help keep you up to speed with disruptive technologies that are happening all over the world. It takes work to be a good investor. You can't just get stock tips from people because most people you're getting stock tips from have no idea what's about to happen. In my opinion, the best way to be a good investor nowadays is to hear firsthand about new disruptive technologies, and that's why we are constantly bringing you interviews and news from companies you may never heard of that are working in so many arenas, because it's the combination of disruptive technologies that is now so important. You can't just make an electric vehicle anymore. You also have to be working on autonomy, because the transportation of the future, the very near future, will be autonomous. So many companies like Mullen, which can barely make a bare bones electric vehicle, how are they going to compete with Tesla, which is making incredibly efficient, safe, affordable, high-tech, upgradable, autonomous electric vehicles?
And the last point here is that, we focus a lot on electric vehicles because we believe it's the future. And I think that might give kind of an unfair light to a company like Mullen, where you're going to go like, oh my gosh, all of these electric car companies are failing. Oh no. Well, that's because we've only been focused on the electric car companies. We haven't been, I personally don't know of any internal combustion engine companies, like car companies that are like startups that are trying to come online. Now, maybe there aren't any, but maybe that's for a reason. Right. It's really hard to make a car company. Okay.
Exactly.
It's really extremely difficult. There's this thing called barrier to entry. You have to get up to a certain level before it makes sense to start. Like, if you wanted to start making microchips tomorrow, I'm sorry.
Forget about it.
You forget about it. You can't sit there and, with a little tool and scratch out a little microchip and be able to make any profit on it. Right. Even if you were sitting there with your chemistry set and you were able to etch out a microchip, to be able to get to the size and scale of some of your competitors, your new competitors, there's no way you're ever going to be able to compete. And it's the exact same thing with any car company.
I've been listening to a lot of startup founders recently, and they're saying if you want to start up something big, you have to start with something small. So a lot of the founders today are starting small companies that they know they can scale quickly and sell to make a few million to start the next company to make a few more million to then make something bigger. Who did that before? Elon, right? He started a small company, sold it for millions, made a bigger company, sold it for millions, and had the money that it took to just barely get Tesla and SpaceX off the ground. He couldn't have done that if that was his first start. I'm not saying he had a playbook and he knew that's what he was going to do, but that's how you have to do it today.
And it didn't take all his money. It did. Took all his money. He put all of his money into Tesla, but it also took lots of other investment.
Right.
But that investment would not have come
exactly
if they didn't see a guy who, first of all, was extremely successful in multiple areas,
and then it put all his money in,
and then put all of his money in it, because that sends a completely different message, and that's why he got the capital that he needed.
And look, I'm not against Mullen. 10 years ago when they started, they probably thought this is a great place to be, and it was, right? Let's go back to 2014. Great.
Any electric car coming out on the market was a big deal. I remember back in 2011, my engineering teacher in high school had us researching electric cars. He was like, go find me an electric car. I want to buy one, right? Like it was such a selfish project for him, but he really wanted to buy one. And at the time, it was the Nissan Leaf, I think. And
a
like,
Roadster.
And like the Tesla Roadster. And those are kind of the two things that you could buy if you could afford them.
Right.
And then there was a whole bunch of other little golf cartish things. And I mean, no wonder we all thought that electric cars was so derpy.
Right.
It's because we were stuck with that. And it really was Tesla who went for the most expensive thing, just like you do with a lot of successful technology.
And again, I'm really glad that there's founders out there that want to start an electric car company.
Yes.
But if you look at Mullen, they only recently hired a design firm to design them the car. So they didn't really want to from the ground up design anything. And then with the trucks, well, pretty much the same thing. Bought a bunch of existing truck companies and went for basically just kind of converting trucks to electric.
Well, and again, you look at maybe another step up from Mullen, you look at Lucid, you look at Rivian, they are having trouble in where they have pretty much all the money in the world, right? They have as much capital as they want, right? So that problem has been solved for them. They still have trouble producing the cars. The manufacturing is very difficult. And I can look back and understand why so many people were so negative on Tesla early on, right? Because there's this startup car company that is something you should not do. That is a bad business move. That's never going to work. They're never going to get the manufacturing right. They had so much manufacturing trouble, if you remember back in the day. But because, and I think this was the one thing that saved them, besides Elon Musk, was because they had the only viable electric vehicle on the market. It didn't matter how much it cost, and it didn't matter how few of them they sold. People were rabid for these vehicles. The Model S was just, everyone was chomping at the bit for one.
Really good point. That again, if Tesla did not exist, it's almost like they made it harder for other EV companies, because if they didn't exist, we could have the valedictorian of the class would not be there, and so everyone else would seem smarter.
And we would have this sea of middling EVs, and I would, Zach and I would be sitting here telling you, oh, well, you could get a Mullen, but just be sure that you do this or that, because that car doesn't have this or that. And if you want to charge long distances,
there's 4 places you can charge.
And we're so lucky to have Electrify America and all this stuff. I think that it's really interesting to look at all of these different levels of companies, even if you're not going to invest in them, to build your experience, to understand what's going on.
It's kind of like when the Palm Pilot came out, right? Amazing piece of technology. And if, Apple hadn't come out with the iPhone, it would probably be like a leading company, Palm. And we would think it's still amazing. I have a stylus and I'm still writing on my screen. That's the amazing thing about capitalism, is that every now and then, it just blows past what you could possibly get in any other system that we know of yet, where you get people like Elon who come along and just because of competition, they grab the capital. And I mean, in this case, it's worked out great, because we now have something that is cutting edge technology that we probably would not have. We'd probably be dealing with, the Leaf 3.0. So thank you so much for joining us. I hope this was kind of insightful as to what happens with these companies when they get funding too fast. A lot of them were SPACs, and they're not profitable. And, a lot of you watching are like, well, but Mullen could go really high. I'm not a financial advisor. do your own research. We talk about this a lot over our Investing Club Slack, but I would stay away from it because my prediction is it's going bye-bye.
But again, the thing is, they're doing the full court press now. So right. There's going to be a lot of positive stories, and they are hoping that you're going to get swept up in it for good reasons, right? Oh, it's so that way you can help our company and we're going to be hopefully successful. That's what they think. You have to think. You don't have to think differently than them, but you have to make your own decision about that.
Right.
And that's what being an investor is. So,
but let us know in the comments below if you want us to try and reach out to their CEO for an interview. If you think that would be helpful. I do think sometimes it's helpful to hear from, the head of management, especially a guy who's been at the company for the whole time.
Yeah. And it's easier for us to do it now because they're desperate.
They're probably desperate for some publicity.
We can hopefully, what would be interesting to me would be to find some of these mistakes.
Right.
And see where they went wrong. Not that they're probably going to want to admit it, but we can try and read between the lines.
Yeah.
It'd be kind of interesting. Let us know what you think. Thank you so much for joining us on Disruptive Investing, and we'll see you next week.